Well, hey there, fellas. It's been a minute. In this video, I'm going to be talking about market structure shifts, giving you a complete guide here about how I approach market structure shifts, how I trade them. Okay. This can be used, of course, in futures, which I'm going to go over an example here. It can be used in Forex, crypto, you name it, it can be used in it. I'm going to go over a few different time frames, the 15-minute, 5-minute, etc., to show you what it looks like on different time frames here. So navigating into the Discord chat to show you the chart, what I plugged, ES 15-minute bullish shift incoming. That was yesterday, 9:57, timestamped as always. And I know it's on somebody's mind already about just to kind of clear this up. But thinking, oh, you trade futures? I didn't know you traded futures. I don't trade futures. I trade Forex. But I still talk about futures in the 1% Club, my mentorship chat for my mentees, because I do have several people in there that trade futures. So I talk about that as well. And I plug charts in there, talk about it on stream, etc. And again, if you do want to partake in that, I'm going to be opening up a new class to the mentorship come July. So if you do want to partake and be a part of this, then there's going to be a link to the wait list in the video description. What do we need for a high probability shift? Let's go over the list real quick. Number one, you need a major liquidity grab. You need an opposing draw. You need a fair value gap, and you need a strong close on the displacement leg that creates the shift. And I'm going to throw this one in here as well. Discount, which of course, I'm going to dig deeper into all of this, so you're going to know what it means. So I'm just kind of giving you that list right here for starters to kind of give us this checklist, okay? So for starters, though, we need a major liquidity grab. I think that, the major liquidity grab one, I think most people understand. I think it's like the opposing draw, discount, all this stuff where folks kind of get a little bit lost. But we're going to talk about the major liquidity grab first. So this thing came down, and it took out higher time frame sell side. That's a major liquidity grab. What do I mean when I say higher time frame sell side? All I mean when I say sell side is a swing low. Low, slow in the middle. Look at my cursor. Higher low on the left, higher low on the right. You see how that takes out on that flush, that swing low right there? How that flush is beneath that swing low right there where my cursor is now pointing? It takes out that, but it also comes down to another higher time frame level right here. Comes down to the imbalance. It has taken out a lot of liquidity, folks, on that push lower. Sure, it's getting clobbered, it's selling off real aggressively, but it's taken out a lot of liquidity in there. So I have a major liquidity grab to frame the shift. Okay? So when I say liquidity, I just mean just look for the swing point. In this case, it's a swing low. For a bearish shift, you would want to see it take out a swing high, of course, major liquidity. Okay? So we take out that liquidity, and on the displacement leg, of course, you want to see a fair value gap and a strong close. What do I mean by strong close? What I mean by a strong close is on the displacement leg, you want to see it have a strong close above a short-term high. If it's a bullish scenario, reverse for a bearish scenario. You see that right there? Where my cursor is now pointing, right there? That is a swing high. Highest high in the middle, where my cursor is pointing. Lower high on the left, where my cursor is pointing now. And a lower high on the right, where my cursor is pointing now. That is a swing high. That is a short-term high here. It gets a strong close above that. Right there. Look at my cursor. That 9:15 candle closes at 9:30. You see how that closed above it? It didn't respect that level. It closed above it. You see what I mean? An example of where it did not close above it. Now, this isn't like, I'm not even saying like this was something that I was looking for like a shift or anything. I'm not saying that, but I'm just kind of showing you like the difference. You see like that failed to displace, for example, above this short-term high. You see that right there? I just marked it on there. Look, see that short-term high where my cursor is now pointing up here, top left? See how that failed to displace? That's an example of what is not a strong close. This is an example of what is a strong close because it closes above that high right there. And you see in the process, let me just kind of remove this higher time frame fair value gap so you can see what I'm talking about a little bit easier. There's your fair value gap on the 15-minute. Remember, 3 candles make the fair value gap. Look at my cursor. Follow my cursor. 1, 2, 3. The top of that first candle and the bottom of that third candle do not touch. And if you want more information on fair value gaps, because I don't want to spend a lot of time in this video talking about fair value gaps because I already have a video on it, you can, I'll leave a link to my video on fair value gaps in the video description. You can watch that as well if you don't quite understand what fair value gaps are. So we have a fair value gap right there. We have a strong close. Okay, so far we have concluded that we have a major liquidity grab, we have the fair value gap, you have the strong close, but that's just part of the puzzle, folks, because a lot of traders understand that. They understand that part of it, but they're still having trouble with these shifts, right? Because it does go deeper than that. Like they'll get their displacement and then they'll just get tagged out repeatedly again and again and again and again. It's like every single displacement that they try to buy into, they just gets clobbered and it sells off on them. They don't ever get that follow through. If that's you, you're not alone in that problem. It's an issue that a lot of traders face. Okay. So here's the thing that they're missing. A lot of these folks are missing is they want, like, you need an opposing draw, and I highly recommend you implement premium and discount. So let's start with premium and discount. What does that look like? This is a 15-minute shift. Okay. It's a 15-minute bullish shift. But here's the thing. Do top-down analysis. The 1 hour is bearish structure still. I was completely aware of that. This is still indeed bearish market structure on the 1 hour chart. Okay. But if you're going to frame a 15-minute shift, you need to understand if it is in a premium or a discount on the 1 hour and the 4 hour. Okay. So like, because it's bearish structure, you can't neglect that structure, that higher time frame structure. So if the 1 hour structure is bearish, do you think it's a great idea? Do you think you're gonna get maybe the best follow through if that displacement leg on the 15-minute is coming up into a 1 hour premium, expensive, bearish trend, expensive? Do you think that's going to give you the best follow through? A lot of times, no. But here's the thing. Take your Fibonacci from this high. Why this high? Whenever I'm drawing out a dealing range now, I didn't always do it like this, but I always do it like this now because it's the most accurate way to do it. Whenever you're drawing out a dealing range, how to find your dealing range, take the high that grabbed a previous swing point. So you see how this high right here, look at my cursor. You see how that high right there grabbed this swing high, how it snatched that liquidity. It came up, snatched it, boom, sells off, right? It snatched that liquidity. You're going to take your Fibonacci from the high that does that in a bearish scenario, just reverse it for a bullish scenario. It'll be a swing low, of course, from high to low. That displacement that you saw in the 15-minute, it confirmed in a discount. So here's what I did, and here's how I came to the conclusion that that's where I would take profits into. Because look, I said, look for a push up into that old low below. Right there where my cursor's now pointing, right there. That's the old low that I'm referring to. I got the 15-minute shift right there in a discount. It is in a 1 hour discount. Stay with me here. It's a 15-minute bullish shift. This is a change in trend that I am anticipating on the 15-minute. But I also cannot neglect the higher time frame structure. The higher time frame on the 1 hour is still bearish, but it confirms in a cheap marketplace within that bearish 1 hour trend. So what I got to do next is, and this is where folks go wrong, you need to be aware if you're in a premium or a discount here. So we conclude we're in a discount, and then my focus goes to where is the next key level in a premium. There's 50%. The second you come up above 50%, it's beginning to get expensive within the 1 hour range. So what I did here and how I came to the conclusion that that's going to be the PT area is I said, where's the next key level within a premium, the next key level of resistance within a premium? Because when you have an old low like that in an imbalance like that, it's a sensitive price point right there. Next key level above 50%, that old low, that's how I came to the conclusion that that's going to be the PT area. Plus it allowed for a 1-to-1 too. Y'all know I like 1-to-1. So that's what I did. Like, I concluded it's in a cheap marketplace. If that pushed up and it gave that 15-minute displacement all the way up into an expensive marketplace, it would not, I repeat, it would not be that interesting at that point because it's expensive then. Because I want a low-hanging objective deal. I want that low-hanging objective target. I'm not saying there still aren't times you'll get a push-up, of course, because there will be. But still, just because it can push up doesn't mean you should be in it. Think about that. Just because it can push up doesn't mean you should be in it. I want the low-hanging objective deal. So I want to see that in a discount, where it displaces in a discount. And then I want to target the next key level in the higher time frame premium. You see? So an opposing draw. I talked about an opposing draw. This ties in real nicely to the premium area because I just told you that I have this inefficiency created to the downside. That fair value gap, that's an opposing draw. But it goes like hand in hand with the premium that I was just talking about because it displays us in a discount and I have this fair value gap. So it's coming up and it's rebalancing. It hasn't rebalanced it completely, but it rebalanced a large part of it in a premium. That's an inefficiency. That's an opposing draw because that push lower was too fast, too quick, too explosive. Price did not have a chance to efficiently deliver that price action. It leaves behind an inefficiency in price. So it wants to come up into an expensive marketplace to rebalance it. That's an opposing draw. So it confirms in a cheap marketplace and then it reverts into an expensive marketplace to your next key level, an opposing draw on a premium. It confirms with a 15-minute shift in a discount, it reverts into the higher time frame premium. When I say higher time frame, I mean because it's a higher time frame than the 15-minute, then your execution time frame. So this is why it's important to utilize a couple different time frames here, so you can see, like if you're in a premium or a discount, and you can like because you want to have that as like your outlook. You want to have that higher time frame to show you if is it cheap or is it expensive. All right, so the 1 hour, of course, and your 15-minute in this scenario is your execution time frame. So you get your confirmation. You could literally just hop in right there, as I demonstrated on stream with my mentees. So of course you could just like took it up into that old low right there, 1-to-1. Oh, 1-to-1. You can reset low or however you want to go about doing it. So you just target that simple 1-to-1 on it. I'm not saying you got to do 1-to-1 because I know some folks, I'm not going to change some folks' mind. They're set on like doing their 2-to-1 or 3-to-1. Not saying you can't make money doing it. I like 1-to-1. But if you want a little bit bigger risk reward on the deal, well then just wait for a deeper pullback. You're going to miss a lot of deals, but you can just wait for a deeper pullback or maybe an OTE entry. But that's how you go about doing it, folks. With that's good. And it's very, very similar. Like what I showed here, I still want to go over some other examples to really drive the point across, because I think it'll help you to see it on a couple different time frames. But it's really the same thing. What I showed you here, you can utilize on the lower time frame. So you want a higher time frame outlook to see if is it cheap or is it expensive. You want to see the confirmation, the fair value gap, the strong close. You want the liquidity to frame the push up and the opposing draw. All right, this is a really good example of what not to partake in. This will make for a good example. Because like EU on Friday, it had a big flush right here. If you remember, it had like that big flush right there, but I didn't partake in that. I did not partake in that for a shift. Okay. I'm going to tell you why. I didn't for that 15-minute right there. Cause it's just a stop run. Okay. Well, actually I'm going to go over a couple different examples from Friday with this, because there's a few things I want to take note on. All right. So this came up and it did clean out so much liquidity right there. Higher time frame buy side. So it does satisfy that requirement that we talked about a second ago, that checklist. It has a lot of liquidity taken. So it does have that. And this is where, again, this is probably I know there's so many folks that tried to short that got, that didn't get any type of follow through because they saw the liquidity taken, right? They saw that handled, but then they got stuck in this scenario and then they're left scratching their head. Why? It has so much liquidity taken. It has the fair value gap. It has a strong close on the displacement leg. Why didn't it do it? Think back to what I told you a second ago with that checklist. There was a couple other things in there, and those couple other things where folks go wrong. Implement the premium, the discount, the opposing draw scenario. So here's what you got to understand, folks. It has that 15-minute displacement. Go back to your 1 hour. You see this big deal in range right here? This is consistently putting in higher lows at this point. That is 1 hour bullish structure. It had that big flush right there that you saw in the 15-minute. You do got that 1 hour imbalance right there too, by the way. You got 1 hour sell side tripped out right there, by the way. But look right here. And remember, I take that low because that was like grab that previous swing point, because you don't have that scenario anywhere else in there. From that low to that high, that big flush that you saw in the 15-minute there, that was right down into 1 hour discount within bullish structure. So think of it like it's had a chance to breathe now. not only is it coming down to a discount, but it's also taking out 1 hour sell side. Here's another thing that I forgot to mention a second ago. With my 15-minute shifts, 15-minute bullish, 15-minute bearish shift, I don't want to see 1 hour sell side or buy side taken, whether it's, I'll say 1 hour sell side or buy side, because depending on whether it's a bullish or bearish scenario. For a bearish shift, I do not want to see 1 hour sell side taken. Okay. For a bullish shift, I do not want to see 1 hour buy side taken. Okay. When I say buy side, I mean a swing high. When I say sell side, I mean a swing low. We have a swing low in there. Lowest low in the middle, higher on the left, higher on the right. That 15-minute displacement that I was just talking about took out 1 hour sell side. So not only did it take out 1 hour sell side, it's moving down to a discount doing that. So you got a few things happening here. You're moving down into a 1 hour discount, but you're also taking out 1 hour sell side in a discount. With all that happening, do you think that's going to be the best scenario for a 15-minute, to look for a 15-minute shift? Heck no. Heck no, it wouldn't be. It's cheap and it has more liquidity now. Okay. So, and it took out that imbalance. So you have the opposing draw taken already, folks. The opposing draw was right there. Let me make that very clear. This was the opposing draw, and it took that opposing draw. It's cheap. It's bullish structure on the 1 hour. So you cannot trust that 15-minute displacement. It ends up just being a stop run scenario. And that just ends up being a what? That just ends up being a lower time frame shift on the 5 minutes. You see that right there? You see how that pushed up right there? And it gave the fair value gap. It gave the strong close. So we could even use this as a lesson, actually. We could even use this as a lesson because that grabs significant liquidity on the 1 hour. See where I'm going with this? We got 1 hour sell side. We got that 1 hour imbalance. We got the 1 hour discount. And then that 15-minute just ends up being a stop run, a fake run lower. And then the 5 minute off that 1 hour, stay with me, off that 1 hour sell side, that 5 minute gives a displacement, a fair value gap, a strong close, short-term high right there. See that strong close, fair value gap? And then it pulls back into a discount and then it continues higher because it's already moved down into a 1 hour discount within 1 hour bullish structure. So that 15 minutes not being respected as a result. See how that works? And here's another example. This one didn't take out 1 hour sell side, but it came up. It took out this higher time frame buy side. We got that big flush just like EU had. And then it came down here. But yet again, look, from low to high, below 50% it moves. So you want to utilize these higher time frames to understand if you came down into a premium or a discount, whether it's a bullish or bearish scenario, of course. In this case, it came down to a discount below 50% of that dealing range. Okay. So it comes down below 50% and it's now moved down to a cheap marketplace. It's putting in higher lows at this point. That's not a great scenario for the frame a 15-minute shift off of. So you see, that's why it pushes up. This just ends up being a stop run scenario because it moved down into a cheap marketplace. It's had a chance to breathe now. And then it just ramps up and takes the highs because it's overall bullish. So you need to have these other aspects, folks. You can see you can have the liquidity taken and then you can have that displacement, fair value gap, strong close. But then you can still get caught with like a lot of fake run scenarios because you got to implement, you got to make sure you have an opposing draw and you got to make sure, again, the premium to discount's another big tip that you can utilize to get way, way better follow through. So here is another example. So USD CHF, this is on the 21st. This came down. You see, it was selling off here, came down and tripped out this higher time frame sell side right there. When I say higher time frame sell side, what do I mean? A swing low, right? There's your swing low taken. Also notice that it's in a 4 hour discount too. Notice that it's in a 1 hour discount too. See that? As per like how I do it, when would it come up into a 1 hour premium? Well, I take, again, the high that grabbed a previous swing high. So you see like that right there, look at my cursor. That took out this previous swing point. So I would take that high to that low. Gets above that, it's above 50%. So it is still cheap. It's cheap on the 1 hour because this is a 15-minute deal and it's cheap on the 1 hour chart. Okay. And I have, so far I have the major liquidity taken right there. That's the major liquidity grab 4 hour. I have this thing in a discount. Now, a couple other things that I need, strictly like something else that I need for my bullish and bearish shifts. Personally, you'll miss some nice moves by implementing this rule, but it's something I've always had this rule. I always stick with it. And it is higher probability when you utilize it. For a bullish shift, For a bullish shift, I need Asian session lows, sales liquidity taken. Okay. So Asian session, that begins at 19, which is 7 o'clock p.m. Eastern time, and it ends at midnight. So you see 19, look right here. You see that little black box that pops up that follows my cursor? There's 19. And of course, note my settings. I'm using, New York time. 19 to midnight. See how that comes down and it takes out that like right after midnight here. So I have Asian session lows taken too. So take note on that. For my bullish shifts, I need Asian session lows taken. For a bearish shift, I need Asian session highs taken. All right, so note that. That's a very important thing that you need to note. So I have the higher time frame sell side taken that I've already talked about. And I also have the Asian session lows taken. So that's a lot of liquidity, folks. It's in a 1 hour discount, folks. And then look right here. Fair value gap. And I get a strong close on the displacement. Now here's another tip. Here's another tip for you that you can implement. I was just talking about this the other day with my mentees as well, giving them this tip to make like it. You can still get some nice moves without doing this specifically because it depends on other factors, but it's going to make it higher probability when you have this too. So have for a bullish scenario, if you want to make them better, again, this is if you want to make your deals a bit better, for a bullish shift, make sure you have Asian session lows taken, but Asian session highs buy side liquidity intact. So again, that begins at 19, ends at midnight. So Asian session highs, look, the 19's right there. Look at my cursor. That's where it opens, ends at midnight. So you see how that at the time that you get this displacement leg, you see how that's still intact up there? So here's a few things you've concluded already, folks. It's in a discount. You have higher time frame sell side taken. You have Asian session lows taken. And you have Asian session highs still intact. So, we were talking about a second ago about how you need an opposing draw, right? There you go. You have an opposing draw. You have the imbalance, of course, as well. But just by doing that, because this is where this trips a lot of people up too, right? Because Asian session highs, that's not a small level, folks. That's a big level. And understand this, price is going to move in the direction of least resistance. It has all this liquidity taken to frame this. And we have this big old displacement that's confirming that there's actually interest off this level. Okay, that's why we utilize the fair value gap, the strong close, because it shows that there's interest here. That it's not that it like that, that big money footprint, I guess you could say, that there's interest to send this thing up. That's what that fair value gap, that's what that strong close tells us off that liquidity. The liquidity, think of that as like the fuel for it. We have all that fuel, and this shows us that somebody's home. When I say somebody's home, it just means that there's interest in sending this thing up. And I have an opposing draw up here. I have Asian session highs intact. So have Asian session lows taken, have Asian session highs intact, fair value gap, strong close on the displacement. Now here's how I specifically execute with my 15-minute and my 1 hour deals. I do the 15-minute, the 1 hour deals the same exact way. The 5-minute, I do it a bit different. The 15-minute and the 1 hour is a bit simpler. All right. So like the execution wise on those, it's a little bit simpler strategy. I always wait for a pullback into a discount. So take your Fibonacci from the low to the high. There's a discount. So you could literally just put now I didn't personally partake because it ended up doing it outside my kill zone, just to make that clear. But the setup looks good, but I can't do anything that's outside my kill zone at this time. But if it was in my kill zone, you could literally just get in right there. And how I do it is I run out the high of the impulse move. Now, it's not the only way to do it, which I'm going to expand on. I'm just telling you how I personally do it. Okay. I always do it like that. I always take out the high of the impulse move that gives the 15-minute or the 1 hour shift. Okay. Because I've used a 15-minute, but the 1 hour is the exact same process with this. All right. If you're using like the 1 hour displacement, of course, make sure it's in a 4 hour discount. Make sure you don't have any 4 hour higher time frame buy side taken on the 1 hour displacement. Oh, and by the way, that reminds me. Another thing, you remember I was saying a second ago about the displacement leg. If I'm doing it on the 15-minute, I don't want to see 1 hour buy side taken. Meaning like I don't want to see it come up on that 15-minute displacement and take out a 1 hour swing high. There's no 1 hour swing high taken in there. You see that? Like there's no 1 hour swing high in there. You see that? So that qualifies. I don't have that liquidity being, because if I had a 1 hour swing high taken on the 15-minute displacement, I would disregard it. And if it's a 1 hour displacement, so just imagine that this is a 1 hour displacement, I would want to see a 4 hour swing high taken. Okay. So it's like I'm using the 15-minute, but it's like the same exact thought process. Just go up a time frame when you're using the 1 hour. It's the same exact process with the 15-minute and the 1 hour. It's the same exact process. Just go up one time frame. So how I execute, I enter at a discount, risk to low, target the high, simple 1-to-1. It's just like that. I figured it has more in the tank, of course. And here, for the folks that like a little bit bigger risk reward, here's an option for you. Because I understand not everybody likes 1-to-1 like I do. But if you want a little bit bigger risk reward, you remember I just told you a second ago about how this is in a discount, right? You remember that? And you remember how I was saying you have an opposing draw right there? Agent session highs. That's the opposing draw. That's what we've concluded with this lesson. When we're talking about an opposing draw, a very simple way to conclude that, make sure it's in a discount and make sure you have agent session highs intact. What you can do is you can utilize that as your PT to get bigger risk reward. And maybe even that right there isn't enough for some folks. Like, oh, but it's still just 1.63. Just wait for a deeper pullback, folks. Wait for an OTE entry. For example, you can wait for the OTE entry, optimal trade entry, or just wait for, whatever, how deep of a pullback that you want. Say you want 2-to-1, boom, there's 2-to-1. You got 3-to-1 too. You see that? It allows for it. So there's a million different ways to skin a cat. But I'm showing you how to do both scenarios here. I personally just take the 1-to-1. I'm content with that. Okay? Because what comes with bigger risk reward, of course, is a bit more losses. But that's how you can go about doing it. It's because it's in a discount, and that level right there, that's still a low-hanging objective PT area because it's still cheap. You see how that connects? It's still cheap. It's still cheap, folks. That's an opposing draw. There's no 1 hour buy side taken, and so you're able to shoot for that as a PT area, and you can take that thing out. Look, did you see? Like, I laugh because that's why I don't do big risk reward, because I am not holding the thing that long. But it did it. It did it. Look, it cleaned it out right there. See, that's why I do 1-to-1. It's one of the reasons why I do 1-to-1. There's several reasons why I do 1-to-1, but I ain't trying to hold that thing that long, folks. But maybe you don't mind doing that. Maybe you don't mind holding a bit longer. Maybe you got a little bit more patience with this stuff to hold it. There you go. That's how you can approach it. All right, so now I'm going to go over a 5-minute example here to end it off, because I don't want to make this video too long, but I think y'all got a lot that y'all can work with there already. I mean, I literally gave you a complete model with the 15-minute and the 1 hour there. Super simple stuff, a checklist there. But I'm going to talk about the 5-minute too, and a really good way to go about doing the 5-minute. So we'll use GU. So this came down. You see I had that big flush right there, and it cleaned out major liquidity. So there's your major liquidity grab. It comes down, it sweeps the sell side. So you're coming off major sell side right there. Okay. And you remember what I was saying a second ago about the 1 hour displacement and how that, especially if that's like in a 4 hour discount, right? And like the 15-minute displacement, how that's on a 1 hour discount, right? What do you think you would do? What do you think would be a good way to go about doing the 5-minute? Have that in the 15-minute discount. Now, here's the thing. Do I have some market circle shift deals that I'll be a bit aggressive with, and I'll take a level that's a bit farther up than what I'm talking about here? Yes, because there are different scenarios where I can do that, where it allows me to be a little bit more aggressive with my PT. But I'm trying to give you a very simple starting point, because that's where a lot of folks go wrong, is they see me do something that maybe doesn't exactly match what I talk about here, and then they're like, "Oh, but well, you did something different here. I want to do that too." But you're trying to run before you can walk. I'm giving you a very simple process to follow. Structure. You can build upon it later, and you can get more advanced, because that's what you're trying to do. You're trying to do too much at once, because there are times where you can be a little bit more aggressive, where you can hold for a bit bigger PT to what I'm talking about here. But this is a starting point, because you need to focus on one thing. All right, very simple rules, and that's what I'm giving you here. GU came down and cleaned out higher time frame sell side. That satisfies that first part of that checklist that I was talking about. Liquidity run. It's happened. What are the other ones that I was talking about? You want to see it in a discount, right? This is a 15-minute discount. Am I going to use this high right here? No, I'm not. Why don't you use that high? Because it's not, there's no swing point taken, remember? I need to see a swing high taken. There is no swing high taken right there, so I don't use that swing point. What about this one right here? Nope. Why not that one? No swing point. This one right here. That was like the last one that grabbed that previous swing point, so I use that high to that low for my 15-minute doing range. A discount's right there. So I've ensured that this is having that confirmation at a discount on the 15-minute. So it's in a discount marketplace, and I have what? I have an opposing draw look. Well, I mean, you have several, but just take this one right here, this 15-minute fair value gap. I have an opposing draw right there for a PT that you can shoot for. The next key level. So I have an opposing draw. I have it in a cheap marketplace. I have the liquidity run, and now I need the fair value gap. I need the strong close on the displacement leg. There's my fair value gap. And then I get the strong close. It doesn't have, personally for me, in my rules, it doesn't have to happen on the same push. I got a fair value gap right there, but then I got my strong close right there. So I ended up executing on this particular day after I had that strong close right there. As soon as I got that strong close, I got in it. Or I had a little bit of a pullback, but it's good at that point. It's valid. I know it looks a little bit choppy, right? But that's my criteria that I need. Fair value gap, strong close. It's in a discount, has liquidity taken. I have an opposing draw up above. That becomes an area that you can shoot for. You see? Now, I had that fair value gap right there, but you notice what it did? To make it a little bit simpler for you in the rules, because I know, like, that's kind of a little bit of a gray area, right? Like, well, but can you be a little bit more specific about, like, PT, right? Because you said that imbalance there. But what's, like, a very systematic way to go about taking profits? Because that'd be a good question. Next key level in a premium. Keep it simple. So where's your next key level in a premium? I know I talked about that imbalance, and that's still in a discount. And, again, I'm not saying you can't take profits, because I'll do this a lot of times. If I have a clear level of resistance like that, even if it's in a discount, a lot of times I'll still take profits in a discount because I like low-hanging objective PTs. But to kind of make this as systematic for you as possible, find 50%. There's 50%. What's your next key level above 50%? That buy side. There's your PT. You can do it like that. If that's like as simple as I can make it. For a PT, do it like that. Find 50%. Next key level above 50%. You've already ensured that it's in a cheap marketplace. That's your next key level in a premium. Run out those trailing stops in a premium. Just like that. See that? So that's how you would do it, folks. You got your displacement. Take it up into that right there. And if you want a little bit bigger risk reward, you see how you can get bigger risk reward too. Now, for myself and how I do it with like 1-to-1, let's say I wanted to do that for my PT. And let's say I got in like right there. I would just do this like for my 1-to-1. This is how I do it. And then I just slap a 1-to-1 on it. Because there are a lot of times where, price will kind of gyrate a bit. It might have one last stop run scenario. And I put myself outside of the range of where that stop run scenario happens. Then it comes up and hits my PT. You see, so I like to just do a strict 1-to-1 just to give it ample wiggle room. But hey, guess what? If you like bigger risk reward deals, over 2-to-1 right there. So it's up to you and the type of trader that you are. I know some folks watching this like bigger risk reward. There you go. That's how you can do it. You can still get good risk reward deals just by doing that. If you do want to get access to this stuff, I also plug these charts in my free Discord chat. I plug that in the free Discord chat. There's going to be a link to that in the video description. Make sure you get in there if you want to learn a little bit more about how I do things. But yeah, I hope y'all enjoyed.